going on, everybody? This is David. Welcome back to the channel. Hey, before we start, do me one favor. If you don't mind, just hit that like button. Subscribe if you're not already a subscriber, and share the video. I really appreciate it. As always, remember, I'm not a financial advisor. Always do your own research. I am not a financial advisor. But hey, this video today, I want to touch on or continue to talk about this topic of passive income. And some of these dividend positions, if you find the right position, they can really provide some nice passive income. Now, on my previous video, I talked a little bit about some high yield maxes, which, in most cases can be a little bit risky when we're talking about dividend income, because you're taking a chance on that share price, decreasing. And I've seen some good and bad with the high yield maxes, mostly good, but I've seen some bad as well. But in today's video, I want to talk about two positions that are a little bit or a lot less risky, but can provide the same type of income as you would see in a high yield max. So these are two monthly paying ETFs that do quite well as far as producing monthly dividend income. And you may heard of them. I've kind of seen them being talked about a little bit more now, but they've flown on the radar for the most part. And these two positions are SPYI and QQQI. So I want to jump right into Google Finance, because when we talk about dividend positions, especially monthly paying dividends, we want to see how their share price is performing. So let's take a look at the share price over in Google Finance, and then we'll hop over to Yahoo Finance and look at some of these dividend payouts. And then you can make a decision to see if this is, the right thing for you to possibly add to your portfolio to increase that dividend income. So let's jump right into it here. Just bear with me. And let's see what we got here. So we'll start off with SPYI. What you see the NEOS S&P 500 S&P 500 high income ETF. So you see it's currently trading at $49.02. Over the last week, it's up almost 1%. Over the last month, it's up 3.79%. Over the last 6 months, it's down 6%. Year to date, down 3.54%. Just $1.80 points. $1.80. So year to date, slightly down, almost even, down 3% is not bad actually. So SPYI, you see over the last year, fairly even, right? 0.85%. And we're talking just share price, right? So SPYI is the first that we're going to look at. And then we're going to look at QQQI while I'm over here. Just pull up both of them. This is going to be the NASDAQ 100 high income ETF, currently trading at $50.36. And you see over the last week, 5 days, it's up 0.96%. Over the last month, up 5.73%. Over the last 6 months, down 4%. Year to date, down 3.84%. So not bad actually. Fairly even over the last year, down 0.42%. So not complaining about that at all actually. So you don't see the huge drop in share prices. We've already established that they tend to hold their share price, right? So and that's one of the main concerns when we talk about dividends that pay a strong ETF. Hey, is it going to drop? Is it going to go from 50 to 40 or from 40 to 30, even though it's paying the dividend income, which they call the dividend yield trap or dividend trap? And so far, when we looked at the prices, right, we've seen that these two particular positions are holding their share price. So that checks off a major box when we talk about this dividend income. So now let's go over to Yahoo Finance and let's just see how these positions are paying out each month, and to see if it's well worth your time, which I think it will be. So let's check it out. man, we're starting off with SPYI. And man, this is off the rip, right? Said the price was down on Tuesday. Off the rip. Look at these monthly paying. These are the dividend payouts each month. This is the monthly paying ETF. You see this past month, a few days ago, you see 0.506. That's 50 cents per share that you're receiving, which is amazing actually. So you see 0.506, 0.462, 0.506 a share, 0.514. So this position is holding this dividend payout, and which is a nice dividend. You see anything above 50, sometimes above 20, above 30 cent, above 40 cent, 50 cent or above is crazy for a position that's also holding its share price. So if you have money that you just parking, you're not making that money sitting in the bank for the most part, right? I know we want to look at our savings and see the money there, but what if your money was making money each month? And that's the goal of investing, right? You want to put your money to use, and to see a dividend that's paying, an ETF that's paying this amount each month and holding your share price. You put a decent amount of money in. That's extra income, passive income each month that you could be making on your idle cash. So we see SPYI. Go back to the summary here just to see. We'll read a little breakdown of the of the position here. And we see this fund is an actively managed ETF that seeks to achieve its investment objective by investing in a portfolio of stocks that make up the S&P 500. We're talking about SPYI here. Make up the S&P 500 index and a call option strategy, which consists of a mix of written call options and long call options on the S&P 500. Under certain circumstances, the call option strategy may include transactions with covered call options. So that's the SPYI that we talked about. We looked at the dividend, we looked at the share price, and let's look at now our second position that we looked at, which was QQQI. Which we already said is the NASDAQ high income ETF. And let's go down and let's read up here. If I can get this. I hate y'all find it. I hate the setup because it jumps all over the place, but it's okay. Let's read a little more on that if it's going to open up for me here. There we go. So this fund is an actively managed exchange traded fund that seeks to achieve its investment objective by investing in a portfolio of stocks that make up the NASDAQ 100 index and a call option strategy. So similar to SPYI, right? That consists of written sold call options on the NASDAQ 100 index. Under normal circumstances, at least 80% of the fund's net assets plus borrowings for investment purposes will be invested in securities or derivative instruments linked to securities of companies that are included in the reference index. So let's take a look at these dividends. So if you ever want to look at the dividend on Yahoo Finance, you go to historical data. And it shows you can see the price each day, right? And you see it's a monthly paying dividend because you see this payout each month. You're going to take the shortcut here. You want to click on historical prices, go to dividends only. That's what we want to see. And wow, look at this. 63 cent, 53 cent, 58 cent, 61, 62, 62, 61, 61, 60 cent, 64, 60. You know what? This is amazing. And it lets me know that I need to put more money into this ETF because I do own QQQI. I do own SPYI. They're two of my smaller positions that I was just testing out. But this is a wake-up call, a reminder for me that I need to put more money into these funds because they have nice payouts. They're holding their share price. If you have just idle cash, you don't want it just sitting around. So these may be two positions that I may treat as savings accounts. parking funds in these two ETFs, SPYI and QQQI, and letting my money continue to grow. So I've been slowly building each fund, a couple of dollars here, a couple of dollars there, reinvest the dividends. And it's slowly, slowly, slowly. I'd have a couple of shares of each, but these are going to be two main staples in my portfolio for years to come if they keep performing like this. So SPYI, QQQI have moved up to two of my top two dividend paying ETFs, right? They're on the safer side. They pay strong dividends each month and they hold their share price, right? So if I had to give a top three right now, I'll still go with JEPQ, number one. And then I'll go SPY and QQQI right after. So those are my top three ETFs, dividend paying ETFs. JEPQ, JEPQ, SPYI, and QQQI. If you're looking for a safe place to park your funds, you may want to look at these dividend paying ETFs where they hold their share price and they pay out nice monthly dividends to your account. So, something to think about, and once again, guys, I'm not a financial advisor, but I like to share information and, especially something that I'm involved in. I do have quite a bit of JEPQ that I've been investing in for a couple of years now, receiving monthly dividend income. SPYI and QQQI are two of my newer positions that I've had over the past few months. I'm very satisfied with the performance of both ETFs, and I want to continue to build up my positions in both ETFs. I'm going to try to make a conscious effort to definitely increase those investments I am making into those positions. So let me know what you guys think. Do you have any dividend paying ETFs that you want to share? We know about the SCHD. We know that's a popular one. But hey, I'm telling you, JEPQ, SPYI, QQQI, they're on the rise. They pay monthly. And I think they're just as strong as SCHD, if not stronger. So that's just my opinion. So let me know what you guys think. I appreciate the feedback. Remember, like, share, subscribe, man. Hit that notification bell. But I appreciate you guys tuning in, and I will talk to you later.